Hey YouTube, this is Will. Please like and subscribe. So I just want to point out that this is not financial advice and is my opinion and intended for educational use only. So breaking news, Airbnb just did their S-1 filing and is planning to IPO by the end of 2020. So what is Airbnb? They were founded in 2008 and is a major disruptor in the hotel industry. As a customer, you can book a whole house to a single room during your travel, and as a host, you can make passive income by renting your house for a short-term stay or even a long-term stay. They also have this new thing called Airbnb Experience, and it's like having your own tour guide or personal trainer to your Instagram selfie cameraman. So yeah, that's a little bit about the company. So let's dive into their S1. So I'm not going to go through the whole 300 page. I'm just going to point out some key finances that I think is important that I'm looking at. So I'm looking at their monthly night and experience book trend. So in 2019, October, November, December, it seems like they had a steady nights booked or nights and experience booked. Then in January, there's a uptake of over 10 million or around 10 million. Then February, March, April, that's when the pandemic hit. So you see that dip, which is expected. Then suddenly it kind of picked up again in May, June, July. I didn't really expect that. But as we can see, August, September, we're going in the downtrend again. I think it's because COVID has been picking up. And I expect some of the states are going to be shutting down again. So we're going to have a downtrend going into next year. I also want to point out in 2019, they had a total booking of 327 million. I think that was their highest year yet. But if we're comparing 2019 and 2020, the same 9 months, they had a 41% decline in booking because of the pandemic, most likely. Alright, so I'm jumping to their consolidated statement of operation. I'm looking at the revenue and costs and expenses. So from 2017, 2018, 2019, it looks like they're growing. There's a 30% year-over-year growth from 2018 to 2019. Their cost of revenue is also growing. This is mainly because of payment processing. So as your revenue grow, payment processing costs more, so cost of revenue will grow. They also increased their budget for product development right here in 2019. Sales and marketing is going up steadily as well. And in 2020, they actually cut their budget for sales and marketing. So this makes sense. This is cost saving measure during the pandemic. And they also recorded a $700 million loss in 2020 in the 9 months ending September 30th. So I'm going to jump to this as looking as a percentage. So as revenue is 100%, cost of revenue is steady at 24-25% throughout the years. We had a little increase in 2020. So let's look at operation and support, about the same, 15-17%. Then product development, 16%, 16-20%. So yeah, that's where we see the uptake in their budget in 2019. They increased their budget by 4% in product development. Sales and marketing at 34-30%, and 22 in 2020. That's because of the cost saving measure due to the pandemic. So this looks pretty good. It looks like the company is growing organically. Also, I want to point out in 2020, they had an 8% increase in product development. This is a good sign and a strong company because they are changing their business model to meet a more COVID-friendly environment. So let's look at their losses. 2017, they had a 3% loss. 2018, they almost broke even. I think they recorded a loss in the other consolidated statement of operation. In 2019, they had a 14% loss. We can see their total loss of expenses is increased by 10%. So there's an increase in the 10% budget somewhere here. So I'm guessing it's the 4% of product development, another 4% here in marketing, and then you have 1 or 2% added throughout. So that's why you have 110% compared to the revenue. So yeah, let's jump to the next section. So I jumped to their quarterly consolidated statement of operation. I'm looking at this every quarter. It looks like their most profitable quarter is the third quarter. Even in 2020, they booked a net income of 219 million. So I'm jumping to their balance sheet right now. I'm looking at how much cash they have on hand, how much liability, and how much asset they have. So let's look at this. 2018, they have $2.1 billion. That's a lot of money. 2019, they have $2 billion. And as of 2020, 9 months ending September 30th, they have $2.6 billion cash on hand. And a total asset of $8.7 billion. So let's look at their liability. Liability means what they owe, right? If they have to liquidate every asset and all their cash on hand, can they pay it off? So their total liability is at $6.8 billion. So they have a net of $2 billion. So that looks like a pretty good company, pretty good balance sheet. So there's one more thing I want to point out, which is their stock-based compensation. It looks like they paid out $108 million of stock-based compensation in 2020. This may be because they have to pay out the 25% layoff worker in the reserve stock unit, the RSU, so they have to pay that out. That could be the case, or it could be a bonus to executive, which is not so good because we're in a pandemic. But yeah, that's all for finances. So a little bit about their long-term growth strategy. I think they mentioned that they want to expand into India, China, and Latin America. So that's pretty good. There's still untapped markets over there. So we can see their revenue keep growing. And maybe if they have a better negotiation with a payment processing merchant and get that lower, we can see a better margin in their accounting. So what is my strategy in investing in Airbnb? In my opinion, I think we're getting a COVID discount on Airbnb. I think I would jump in on IPO day with about 20% to 30% of what I allocate to buy Airbnb and hold it long term and average in that cost. That's all. I hope you found this video helpful. Please like, subscribe, and leave a comment below. And thanks for watching.